this is sort of like an overview. I'm doing an overview of things that we've covered to show you how all of these concepts can come together. They're supposed to come together to tell a complete story. They're individually powerful, but my God, when the concepts start coming together, like the pieces of a puzzle start coming together, and you see in all of its glory the entire scene start to develop. Each one of our sessions is a little piece of a broader puzzle. And it's beautiful when you can take a chart and see all the pieces kind of come together to form the scene. And so that's what I wanted to do today, to show you how many things we have covered that can be in one thing, in one scene. I want some of you to tell me what you think this is. Now, we're looking at a daily chart right now. What is this called? A few of you let me know. It is an igniting elephant bar, but it's not just any igniting elephant bar. It's elephant bar plus clearing off the 200. This is our Einstein-like formula. Listen to me carefully, traders. There is nothing more powerful than that combination. And I've taught you this. This is so powerful, I'm actually thinking about getting t-shirts for us with this formula on it. You'll be walking in the mall and people will be like, what does that mean? That's how powerful this is. There is nothing more powerful for us as traders. The next thing I want to cover, item number 2, is the falling wedge and the rising wedge. So here's the concept. The pullback this way, if it is controlled and if it stays in the upper portion of the last power move, you need a power move here. But if the pullback is orderly, meaning nothing really violent, not like this, nothing really violent. If it's like a falling wedge, the odds of continuation are high. So falling wedges, or what I commonly refer to as orderly pullbacks, as long as you have power to the left, remember, you need the power to the left. Without the power to the left, this doesn't work. So you need power to the left, or it can be this way too. It can be power in the form of a single surge, or it can be power in the form of a marching surge. This is a marching surge, a multiple bar surge, or it can be a singular power surge. But whatever, if you get that orderly pullback, as long as it stays more or less in the upper half, the odds of follow through are high in both of these cases. Now, if you look at, here's your surge. Really, if you really should be doing it from here. This is where it really began. Now you can do it both ways. You can decide to eliminate the tail, or you can include the tail, because that's where it really started moving up from. Now, when you cut this in half, more or less, remember that halfway mark is just an area. It's not a specific point, really. Here's that pullback, and boom. These mild pullbacks tend to lead to higher prices. So we've covered this before. Now, let's look at the opposite. Remember, it works this way too. So the opposite, you get a power move down that stays more or less in the bottom portion. The pullback stays more or less in the bottom portion. The odds of follow through to the downside are fairly high. So we see that here. Drop, rally, drop, rally. I'm hoping you see that. Drop. And now what we're getting is the opposite. Rally, drop, rally, drop, rally. This is another concept we've talked about, which brings in the 50% retracement, which brings in elements like the pullback should be rather mild and nothing extraordinarily violent in it. We recently covered head and shoulders pattern, all right, where like that. And we've covered the reverse of that, right? Which is the reverse head and shoulders. Here's the left shoulder, the head, the right shoulder, okay? Here's your neckline. And once you break the neckline, here is where your stock should be now more or less obeying the 20 MA most of the time. If we take that here, not going to be perfect like my drawing, but here's your neckline. The neckline is not always straight, by the way. You're taking the 2 points of the shoulder, more or less, right? And look at the 20. Look at your 20. It's obeying the 20. Remember, moving averages are an area. So, the chart would have you believe that they are narrow. Moving averages are narrow, thin lines, but they are not. They are areas. All of these things we've had individual lessons on. Left shoulder, head, right shoulder. All right, boom. There you go. We have covered the 20 MA halt as well in a single session in the past. Okay? Now, the 20 MA halt is this concept. To have a 20 MA halt, you need several, if you'll recall, you need several characteristics. The stock or the item, first of all, must have spent a good deal of time under the 20 period moving average. So look at we're under the 20 period moving average. All right, this doesn't count. That's a little peekaboo. That doesn't count because the 20 is a zone, right? So don't look at these little mile breaks as breaks. They're not. So we're under the 20, under the 20, under the 20. Criteria 1 is that the stock has spent a good deal of time under the 20. And what I mean is that it's not just a brief period of time under the 20 and then goes back like this. No, we're talking about a lot of time under the 20, a lot of time under the 20, a lot of time under the 20, a lot of time under the 20. So that's criteria 1. You need a lot of time under the 20. Then you need a sudden break through the 20. So this is criteria 2. You need a break through the 20. Now, not a peekaboo break, traders. That doesn't count. You need a height. You need a break that gains some height. So your 20 is like this, right? And your stock gets height. Do you understand? Like it gets height. Let me show you. It gets height above the 20. It's not a peekaboo above. It's height above. So it has some height, okay? That's criteria number 2. You get a break with some height above the 20. Now you watch the pullback, and if this pullback is halted, if the 20 halts it by rejecting the pullback, boom, you got your 20 MA halt. So basically, a 20 MA halt is nothing more than the first successful retest of the 20 after the stock or the item has spent a lot of time under the 20. So what this concept is showing you is that what was previously the item's ceiling, what was previously the ceiling is now the floor. The ceiling becomes the floor. This is the great flippening, right? Flipping the ceiling to the floor, the 20 MA halt. We have covered dual space, have we not? Have we covered the concept of dual space in a session? Dual space, that concept is when you have your stock gets height away from the 20 at a time where your 20 is separated a decent distance from the 200. So you got 3 items. You have the price, you have the 20, and you have the 200 all separated apart, okay, to create space 1. That's why we call it dual space, and space 2. Doesn't matter which space you number. This could be 1 and 2. It doesn't matter as long as you understand there are 2 layers. Now, these layers are not always equal in the real world. We can't have perfection where sometimes they're equal where space 1 is equal to space 2, but not always. A lot of times in the real world, you get the dual space, but the spaces aren't equal, but they're still relatively separate apart. I call it sometimes the three-finger spread. So you've got one finger here, another finger there, and another finger there. There's your three-finger spread, dual space. So when you get violent, listen to me carefully. When you get a stock or an item that has the three-finger spread, that has the dual space, all three items are apart from each other. Anything powerful that occurs from that dual wide space is very meaningful. So from this dual wide space, look at what you have. So we've got wideness, we got the three-finger spread there, right? Boom, anything strong that kicks off a move against the three-finger spread is very meaningful. This igniting power from the three-finger spread will tend to kick off something very, very enduring. Now, let's take the three-finger spread in the opposite direction. Here, all right, it's not as wide as the other one, but it's still there. It's all relative. They're separated apart from each other. They're separated apart. Now, so now this way, this igniting bar out of the same way this igniting bar down, this igniting bar up. When it originates from the three-finger spread, the opposite way, it's meaningful. Does it need to clear 5? No, it doesn't. But if it does, that's now stacking your concepts, right, Ahmed? So the more concepts that are stacked at the same time in one event, the more powerful it is. Do you see? So wide state, that's all a three-finger spread is, wide state, igniting elephant bar, ignite elephant bar plus clearing. So this takes out 5 bars, 1, 2, 3, 4, 5. So clearing, so we've got an elephant bar plus, this is a bear elephant bar plus clearing, not from a 200. So remember, it's not from, this one's not from the 200. Instead of the 200, your location item is dual space. Bear elephant bar plus clearing dual space 2S. Wow. It's another powerful combination. Here you have plus elephant, bull elephant bar plus clearing from dual space. Tell me you understand the formula that we have here. There's multiple things developing or stacked together at the same time. What's another concept that I've taught you? Wide to narrow, right? I've taught you that markets go from narrow state to wide, back to narrow. Sometimes they do it this way, narrow state, wide, back to narrow. So sometimes, so these are your narrow states. Narrow state, narrow state, wide state, wide state, narrow state. Okay? So sometimes you're going to move up from a wide state. Boom, that's here. Sometimes you're going to move up from a narrow state to a wide state. Sometimes you're going to move down from a narrow state to a wide state. But all markets do is vacillate between these two states. So in reality, you have 3 states, right? So the 3 states are narrow state is 1, wide state is, well, let's do it in order. The neutral state, the trending state is 2, the wide state is 3. And so your narrow state is 1, your trending state is 2, that's the in-between state, and the wide state is 3. So you're playing 20 MA plays here, pullback plays, 20 MA plays, color change plays, RBIs, GBI plays. Here you're playing clearing plays, igniting plays. So there are igniting plays out of narrow states. There are trending plays off 20s, mild pullbacks that stay in the top or bottom 20%. And then wide state plays, you're fading and going the other way with clearing events again. So clearing events here can be played this way. Clearing events here can be played that way. Clearing event, wide state, narrow state. Does this make sense? Wide to narrow, back to wide, back to narrow. Does this make sense? Ricky is asking, is it too late to buy? This is what Ricky is asking. Let's help Ricky out. This is a bull elephant bar plus clearing off the 200, and Ricky's asking, is it too late to buy this? What? That is the buy. What are you talking about? That is the buy. The most powerful buy we have.